Update here on Nintendo. I did a video on this about a year ago, and looking at my notes, my first purchase was on 8/23 and $10.68. So that was about a year and a half ago. And my last purchase was a few weeks ago on January 21st at 14.55, and as of today, it's 18.04, so it's doing really well. I don't know that I'd buy more at this price. It's trading at 40 times earnings, but considering what it has ahead of it, I think it's a great bet. So if you look at the prior video I did, I mentioned that they sort of have a lot of little embedded options in it because they have some theme parks coming online that somebody else is going to build for them, and they get a piece of the gate, and they don't have to put up any money, and they get 6% of the gate. So that's, free money, free options. If it does well, they'll make a lot of money. If it doesn't do well, they'll make a little money, but they won't lose any money because they didn't have to put anything in. And they have the movie revenue from the other Mario Brothers movie that's coming out next year, and live action Zelda, and that will actually help their theme parks because you've got people watch the movies, they go to the theme park just like Disney, and they also own a little more than a third of Pokemon. So three companies own a third of Pokemon each, and one of them is Nintendo. And Nintendo also owns part of one of the other companies that owns a third of Pokemon, so a little more than a third. So you got money coming in there, and they have this embedded SaaS business, which is Switch Online, where people uh, have their video games sort of like on Nintendo's cloud, and they pay a monthly fee. And when people sign up for that, they tend to buy more games. And the big catalyst, which is coming in a couple of months, is the release of the new Switch console. So with every console they've had, the Switch, the Wii, when it's released, sales of the console go up, 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 they plateau and they start going down, and then they release a new console, sales go up, 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 and then plateau and then go down. So we're at the down end of the cycle because the prior Switch was released, I think 5 or 6 years ago, and they've been denying that a Switch was in the works, even though there was a lot of evidence to support that it was in the works. Orders from chip makers, things like that, and people who claim they've seen it. Software companies that were given the specs for it to design games, but Nintendo has always denied that they were working on it. And a month or two ago, they admitted not only were we working on it, it's coming out, and it's coming out in the first quarter of this year. The stock actually went down because people had hoped that it would be around for Christmas and they'd get all those sales. And I saw it as an opportunity to purchase more shares, and they're doing really well. As I mentioned, my last purchase was January 21st at 14.55. It's already 18. So if it comes out in, May or June, you'll see it in the second quarter. If it comes out in March, you'll see it in the first quarter. But once those new Switch sales come out, and it's larger, it's supposed to have some nicer features. Not only will you see the revenue from the Switch sales, you'll see more game sales, hopefully, and it'll reinforce that positive loop that it has with the games and the movies and the theme parks, and you'll have sort of the same ecosystem that you have with Disney. And you're for that, 40 times earnings sounds a little high, but if you go to statistics, it's an $84 billion company, and you look at the enterprise value, and it is 66 billion. So that means that it has no debt, and let's see, has a bunch of cash. I don't see it on here, but yeah, so they have a lot of cash on the balance sheet, no debt. And traditionally, Nintendo's been a very conservatively run company. It's over 150 years old. They started out making playing cards in Imperial Japan, then moved into other games like those pachinko machines and stuff like that, and eventually came out with low-end handheld devices. And they've never been cutting edge, but they make games that everyone loves, like Donkey Kong and Mario Brothers and Zelda, and family-friendly games. So you'll never see a first-person shooter game or anything like that with Nintendo, which is why it has a good shot of capturing some of the Disney magic with their theme parks. And as I said, the big catalyst it's coming out soon is the Switch, which is coming out. So at 40 times earnings, and then you've got a bunch of cash. It's probably more like 30 times earnings if you back out the cash. So it's not a bad bet. I am not adding to my larger positions because I left my job recently, so I'm doing more smaller positions instead of adding to my larger positions, just so that if one goes down a lot, like Google, I don't feel it as much. But Google is my largest position, was down a lot yesterday, and I had been trimming on the way up, and I will continue to trim my larger positions and add to smaller positions as I go. And this one is doing really well, and it's become a larger position. But I'm not adding at this price, but I'm also not trimming. I think all the catalysts are lined up now, and I just have to sit on my hands and not do anything with this one, and it'll be fine. And I wonder if I should do a separate video for Coupang or just do it here. Yeah, I'll just add Coupang here. So Coupang is that Korean version of Amazon, and it is actually better than Amazon at what Amazon does because with Coupang, if you're in Korea and you order something by midnight, it will be at your door by 7 a.m. They've expanded into Taiwan, and in the US, Amazon has about 37% of the market share for online retail. And in Korea, Coupang has I think about 28%. So it's doing what Amazon does better than Amazon does, and it's still growing because it's only a few years old. So if they get to the market penetration in Korea that Amazon has in the US, which is a pretty good bet, it should do really well. And the reason that it does a pretty good bet is people in Korea are more tech savvy than they are in the US. The amount of people with phones that have 5G is way higher in Korea than it is in the US. So I think it's got a good chance to at least get to the market penetration that Amazon has in the US. And they also expanded into Taiwan. And in Taiwan, they're actually growing faster than they were growing in Korea when they launched their Korean operations. So it was as high as 26, and then it dropped down to 22, and then I bought more, and I actually bought some options. And the reason it dropped down had nothing to do with Coupang, but there was a coup in Korea. And if you watched, the president declared martial law and tried to keep the legislators from coming into Congress and voting to overturn that enactment. They had the military troops blocking the Capitol, and the legislators actually climbed the fence and went in to vote to. Uh, and now the former president, is holed up in his mansion, and there's troops outside, and they want to go and arrest him, but there's sort of this armed standoff, and that was something I did not have in my bingo cards because Korea is a stable democracy and hasn't had a coup since 1980. So no one saw that coming, but that did hurt the stock. I think the company will do fine, and we'll see how it is next earnings call. I think my common stocks and options should do fine. I may buy more if it comes down because I think the earnings might be a little lower than predicted, not because of their operations, but because when this coup happened, the Korean won, which is a currency in Korea, went down versus the dollar. So if you're seeing earnings reported in won and your shareholdings are in dollars, then at the earnings release, it might go down. And if it does, I would probably buy more. I think, 42 times earnings sounds a little high, but given how well they're doing in Korea and Taiwan, I see like there's a lot better growth for this than something like Amazon, which is kind of topped out. And Amazon is trading at 50 times earnings, and a lot of their growth is due to Amazon Web Services, which is their cloud platform, not really due to their online business. So I think if you are betting on an online retailer that has a lot of growth ahead of them, Coupang is really good. I have a little bit of Mercado Libre, which is also trading at a premium to this. So Mercado Libre, it's a great company, which is like the Amazon of Latin America, and it's trading at 71 times earnings. But this one, yeah, it's higher, but they do actually a really good job. So Amazon had tried to make inroads in Latin America, and Mercado Libre is cleaning their clock. So, if you can outcompete Amazon, that's a good one to bet on. But the price is very high, and I do like Coupang's space in this ecosystem. So still holding Coupang, still holding Nintendo, and undecided on Mercado Libre. I got like 5 shares or something like that. Not a lot. And I like everything about it except the price. But I've owned it before at like 800, and I sold it 1100, and I thought it was overpriced, and I bought it back, and it's 2000, and I'm up like 10% on this in a few months. But I don't know. It always seems expensive to me. But um, as Charlie Munger said, you make more by sitting and waiting than you do by buying and selling. So I should try to remember that. Anyway, none of this is investment advice. This is just me walking through my process. So good luck out there.